All right, let's also get you some commentary on technicals as well this morning. We've got Ruchit Jain joining us. Ruchit, good to have you with us. Let's just first take a look at the kind of range. We've got Chandan Tuparia with us as well. Gentlemen, thank you both for being with us this morning. Priyank and I were discussing earlier this morning that it seemed to be a narrow range that we're focusing on. Ruchit, let me get your targets first. What's the kind of level you're watching out for as we head into a new series?
Good morning, Abha. Well, probably if you just observe Nifty on the daily charts, then it is approaching its support level of 7970 to 8000. So the kind of the correction we have already seen last week from 8300 to 8100 now, we don't think that markets would tank down from current levels very sharply. 7970 to 8000 is going to act as a good support. So maybe another 60-70 points correction from Friday's closing, and we may see another bounce back. But the thing is that if you just observe weekly or bit longer term charts, then we have another lower top in the making on the weekly charts, and also a bearish pattern since markets have corrected last week. So a bearish pattern around the resistance area does not well for positional traders who are looking from about 1 month or 2 months point of view. Looking at both this daily and the weekly charts, we are expecting a bounce back again in the markets post testing this 7970 to 8000 support zone. But for positional traders, the bounce back if comes around 8180, 8200, it would again be an opportunity to create a short portion. So it has become a sell on rise market at current levels. Even if we if we have a gap down opening today around 7970, 8000, we may see some support coming in, and if the markets then going ahead comes around 8200, it would be a opportunity to create short positions over there.
All right, so around 8200, it's a clear short. Even 7980, 8000 would be level to watch out for. Chandan, what are the F&O stats indicating? What are we tracking in regard to the way the November series kick-started and the way the Qs have been shaping out there? Because Chandan, again, markets have been pretty slow. You've seen, the way the consolidation has really played out over the last 5 odd sessions. How are you reading the F&O Qs, Chandan?
Good morning, Frank. We have seen a selling pressure in market in last couple of trading sessions. It has been making lower highs, lower lows, and expiry close near to 8100 zone and near to its volume weightage average of 8120. We have seen some selling pressure at higher levels as market failed to hold this crucial hurdle of 8300 zone, where we have seen fresh call writing at the strike. So that is the reason that market corrected from the higher levels. Overall, it is likely to consolidate in a range. We have seen volatility index which fell down from 23 to 14 kind of levels, now again moving up. So that is the reason that market is finding pressure at the higher levels. But now the maximum put open interest is intact at 8000 strike, and that is likely to provide as an immediate support for the market. As market is making lower lows, lower highs, now we need a support near to 8000 zone, and to negate this weak pattern to get a bounce back move towards higher level. So if it takes support near to 8000 zone, then one can go for option activity for taking the opportunity of bounce back move towards 8080 to 8120 kind of zone.
All right, that's as far as the F&O setup is concerned and what we're tracking in terms of trade today. The SGX Nifty has been still indicating that the markets probably will start off a little bit on a softer note, but there will be a whole host of stocks to focus on in terms of trade today. And let me bring up one such major. Sun Pharma has issued a profit warning, says Ranbaxy integration challenges will dent performance this fiscal once again. Shraddha is joining in with more details on that. Shraddha.
Well, if you talk about the key takeaway from Sun Pharma's AGM and what Dilip Sangvi actually said, the key takeaway here is going to be that the company had warned that they expect revenues and net profit to be impacted in the short term, that is in FY16, and that is going to be on account of the supply constraints at Halol facility and the higher expenses and charges arising out of Ranbaxy's integration and remedial actions. On the synergy front, they did say that the company is targeting synergy benefits of about $300 billion by FY18. This is something that they had already said previously. They had upped the guidance from about $250 million to $300 in the last quarter itself. They also said that they'll be discontinuing some non-strategic businesses. In fact, we've already seen that happening with Ranbaxy's CNS drugs marketing divisions being sold to Strides Arco Labs just last month. Additionally, what they also said is that the company is in the process of remediating compliance issues at the Halol facility, facility, and they expect improvement once the Halol plant facility remediation is in action, and they also expect approvals to start coming in post that. Remediation at Ranbaxy facilities continues as per plans. That's what they've said. Remember, all the 4 manufacturing facilities of Ranbaxy are under US FDA ban currently. And lastly, they did say that the company's growth will involve organic as well as inorganic initiatives. So on an overall basis, the key takeaway is a reiteration of the fact that the profit hit could come in on account of those higher integration costs.
All right, thanks for that, Shraddha. Now, let's also take a look at auto sales for the month of October. They've started to trickle in. New launches on the passenger vehicle side have been driving up those figures. Hiro's joining us with some of the highlights so far. Hiro?
Thanks, Haba. To start off with, the numbers have been pretty stable. For M&M, if you see the passenger vehicle sales, that has gone up by around 19%. CV has seen a growth of almost 31%, and LCV, which had been muted all this while, has seen a growth of almost 29%. Domestic sales have also been good, up by almost 21%. And if you see the total number, that has gone up by almost 20% for the month. And it's only the tractor sales that has remained tepid, as the rural demand has still continued to remain weak, and tractor sales have been down by almost 12% on a year-on-year basis, and domestic as well as exports have been faltering in this month as well. For Tata Motors, the numbers have been pretty stable on an overall basis. Sales has grown by around 1%. The domestic sales of CV as well as the passenger vehicles have remained flat, and the growth has mainly been driven by cars segment, specifically the new launches as you mentioned. If you see the MHCV sales up by almost 20%, CV has been little flat, down by almost 4%, and it's the exports that has gone up by almost 13%. And Eicher Motors, as usual, has given a strong performance. Sales has grown by almost 71% in October to close to 44,522 units. So far the numbers have been pretty much stable.
All right, so that's as far as the auto pack is concerned, which is going to be in focus today. Guys, thanks so much for taking the time, getting us that update in regard to what we're seeing in terms of stocks this morning. But let's try and discuss these stocks that Hira and Shraddha were talking about. Ruchit, I want to start off with Sun Pharma first. I mean, this one's going to be again on the radar. It's been having some bit of trouble since last quarter or so, where the company had highlighted the strain as far as Ranbaxy is concerned. But on the charts, Ruchit, what do you make of Sun Pharma here?
Well, Priyank, if you just observe, in the last 5 months, the stock has not shown any directional momentum. It has just been a range bound. Broader range has been from 800 to 950. So, if we see any breakdown today from 869 support level, we may see this stock going again to the lower end of the range, which is around 800, 810. So as of now, there is no directional momentum picking up in the stock. It's just a broader range which the stock has formed in the last 5 months, and maybe due to the negative news which has come today, if we see a breakdown below 869, then it would move to the lower end of the range around 800.
Chandan, let's get your view on Sun Pharma as well.
Yeah, if you look at the entire database, the stock has not added significant open interest, has been consolidating in a range from last 5-6 series. Stock is slightly witnessing some call writing at the higher levels. We have seen call writing at 900, 920 strike, and that is the reason that upside seems to be limited. It is continuously hovering near to its 50-day moving average, and now if it sustains below 880 kind of zone, then we may see a selling pressure towards 850 to 840 levels. So overall, the trend is range bound. We are observing fresh call writing, and that is the reason that the stock may see some lower levels.
Okay, from the auto pack as well, let's just get your views in on some of those counters. And Chandan, I know you, for example, have got TVS on your radar as well. We're also tracking a whole bunch of those sales numbers that have just come in. Some bright spots in an M&M. For instance, Tata Motors also keeping pace so far at least, and Eicher looking particularly good. From the auto pack, what's standing out to you?
Yes, we are having positive on most of the auto counters, including Ashok Leyland, TVS Motor, Bajaj Auto. We have seen significant open interest addition in most of these counters, and even after market volatility, these stocks are continuously moving upwards. Here I have selected TVS Motor because of its price behavior and the build-up of long position with rollover activity. In last series, the stock has rallied well by 17-18% and given a breakout above its falling supply trend line. It has crossed immediate hurdle of 350 zone and headed towards 375 plus kind of levels. 270 plus kind of levels. So now I'm again expecting the stock to consolidate and then start the next round of momentum. Longs are intact in the counter. In last series we have seen rollover of 72%, and so overall the trend is positive. I'm expecting this momentum to continue. Traders can buy with stop loss of 255 for the upside, immediate target of 280 zone.
All right. Ruchit, let's just get your view in as well on some of these auto names. Just run us through what's looking particularly good to you, because, you know, as we were just hearing from Chandan as well, some of those stocks are starting to perform pretty well. Sales numbers also seeing a bit of a pickup, and earnings as well, when it comes to specific names, have actually delivered.
So in this sector, we believe that it's more, it's going to more of a stock-specific action here on, rather than entire sector moving in a particular direction. We have already seen a good run-up in Bajaj Auto in last few months, and now it is again trading around its resistance area. And on the other hand, even we are bullish on TVS Motors. Probably the stock has given a breakout last month, and again now it's showing signs of consolidation, which should get continued on the higher side. So we are a bit bearish on the Bajaj Auto from near-term point of view. We believe that the stock might correct marginally, although we don't have much aggressive targets on the lower side on Bajaj Auto, but maybe around 2450, 2440 is the level which we are watching it could correct. TVS Motors may continue to move higher, around 290, 295 it could test going ahead. So just with stop loss placed below 255, one can place long bets in TVS Motor and a short bet in Bajaj Auto.
All right, so that's as far as some of these auto counters are concerned, what the strategy is out there. In fact, gentlemen, just hold that thought. Let me also just get a quick mention on some of the other stocks that we're tracking. Hira and Shraddha joining in once again. Hira, let's start off with you. What are some of the stocks that you're actually watching out for in terms of trade today?
Thanks, Priyank. To start off with, firstly, we have Jet Airways that will be in focus, as Rare Enterprises has gone ahead and picked up close to 1% stake in the company. We have IFL Holdings as well as Sequence Scientific that will be in focus, as FIPB has approved 6 FDI proposals worth 1,900 crores, and they've approved proposal of IFL Holding as well as Sequence Scientific. We have all the rice companies like KRBL, LT Foods as well as Kohinoor that will be in focus, as exporters are expecting Iran to issue fresh basmati rice permits by December. So let's see how the sentimental impact pans out on these. We have pharma companies like Cipla, Alembic as well as Unichem Labs that will be in focus, as reports are suggesting that NPPA has capped formulation packs price and of 18 formulation packs, and Cipla, Alembic as well as Unichem Labs are expected to be impacted by the government's move for price fixation as well as revision. We have IOC as well, which will be in focus, as reports are suggesting that they are close to eyeing 5 to 10% stake in Vankor oil field in Russia, and we know that earlier OVL had expressed interest in acquiring 15% stake in the oil field for close to $1.27 billion. However, that deal is yet to be closed. And lastly, we have SR Steel as well. However, it's not a listed company on the group. We might see some bit of a sentimental impact, as the reports suggest that the Ruyas are expected to close the company's asset sale by FY16 end, and the promoters are likely to infuse close to 1,500 crores more in the company to repay debt. And we have CCD, the IPO that will be listing today, and Kelkar has been subscribed 27 times.
All right, so lots to track there. Shraddha, what's on your list?
First, I have ICICI Bank on my list. Well, reports are suggesting it's Piramal, TPG Capital and Baring PE Asia, which is set to be in race for ICICI Bank's arm, that is ICICI Home Finance, and ICICI Bank is looking at a valuation about 4,400 crores for its unit. Apparently, the potential buyers have already submitted the first round of bids, so we need to keep an eye out for that one. We'll also have Tata Telecommunications on our watch list, as STT, that is Singapore Technologies Telemedia, is set to be looking at buying Tata Communications data center business. Well, they're eyeing a controlling stake in a deal which is set to be worth close to 4,500 crores. Google and Amazon, amongst 4 other PEs, are also set to have expressed interest for the same. So that's another one we to keep an eye on. Oil marketing companies, BPCL, HPCL, IOC, all of these again will be in focus, as the petrol price has been cut by about 50 paise per litre. However, no changes in diesel prices. Power Grid Corporation has bagged Vimagiri 2 power transmission project in a tariff-based auction, so we need to keep an eye on that one. Indian Hotels again is in news. Reports are suggesting the New Delhi Municipal Corporation has deferred the auction of its hotel Taj Mansingh in Delhi. Once again, now they've granted a 3-month extension to the Indian Hotels company to run it. Remember, this is the third extension that the company has got in 2015 itself. And lastly, we need to keep an eye out for DLF, as reports suggest the Supreme Court will be hearing a plea to impeach CBI in the DLF case, and the matter is scheduled for hearing next week. Back to you.
All right.
All right, Shraddha, thanks for getting us those updates. All right, let's get back to our conversation with Chandan Taparia and Ruchit Jain. Now, there are a whole slew of counters that have been actually in focus out here that we've been tracking as well in terms of what we've been seeing as far as newsmakers are concerned. Start with L&T as well. Ruchit, what's the technical reading as far as Up is concerned? How are you reading it?
Well, Priyank, we have been bearish on this stock since last few weeks, and now probably we have seen that this low top low bottom formation is still continuing in this stock. But after in last few days we've already seen the stock has corrected from 1600 odd levels to 1300, 1380, 1390. We are expecting another minus 6 to 7% correction in this stock around 1320 to 1330. There's a good support zone for the stock if we observe this weekly and monthly charts, and we don't think that those levels would get breached very easily. So we may see another 6 to 7% downside, but we are not expecting any major downside from current levels. So around 1320, 1330, one can again start to look some bottom fishing in this stock.
Okay, that's Chandan's call coming in on L&T. Ruchit, let's get your view in on it as well, because quite a bit of a scare the counter gave us last week. Chandan? Yeah. Go ahead,
can
Chandan.
you repeat the question, please?
Yeah. Let's get your view in on L&T as well.
Yeah, first talking about capital goods counter and L&T, we have seen disappointment from the counter as it is continuously falling down from last 7-8 trading session. In the month of October, it took support near to 1400 zone and headed towards 1900 kind of levels. But now again it is near to major support, and if it breaks 1400 kind of levels, then we may see a distress selling which may take stock to down by 4 to 5% in next coming trading session. So the stock is now finding some selling pressure. The bears are quite attractive in the counter. So to negate this negative trend, it has to hold above 1400 zone and to move back above 1450 to witness bounce back move towards 1515 and 1550 kind of zone. So now the stock is near to major support, and if it fails to hold, then one may see selling pressure in the counter. Those who are holding the position in the counter can hedge with the buying 1400 put. So overall trend is now in bear grip, and it has to hold and move above 1450 to negate this negative trend in the counter.
All right, gentlemen, hold that thought. Let's take a quick break right now. When we come back, we still got a whole host of strategies to get from you as well, and discuss some more earnings-based counters. All of that coming up in just a minute. Stay tuned. Group. Welcome back. You're watching Street Smart's Dealing Room on Bloomberg TV India. Just a quick comment on what's happening as far as commentary from Moody's is concerned. The SGX Nifty in the meantime down 12 odd points, but getting some bit of commentary from Moody's right now this morning as far as the India's banking system is concerned. They've actually changed the outlook on the system from to stable from negative is what we are reading this morning as far as some of the commentary is concerned from Moody's this morning. So that's the other bit that's going to be in focus today. Ruchit, a quick comment as far as the Bank Nifty is concerned and how you're reading it?
Last week we saw that Bank Nifty had given a breakdown from its support with a gap area. So according to this gap here in the technical analysis, whenever we see any pullback, this gap area is going to act as a resistance. Now that gap is placed around 17,700. So we may see a pullback up to 17,700 in this index, but unless it again moves above 17,750, one should not try to create aggressive long positions in this index. Around 17,700 when the index comes in a gap area, one should again look to create short positions with stop loss placed above the recent high of 18,050.
All right, Chandan, any quick comment on the Bank Nifty as well from an F&O standpoint?
perform the broader market. Bank Nifty started the series with ratio of 2.19, and now the Bank Nifty to Nifty ratio is near to 2.12. Nifty closed positive with the gain of 3% in the last series, but Bank Nifty closed almost flat. That clearly indicates that sustained supply is seen at the higher levels. It failed to cross its multiple hurdle of 18,000, and now it's very tough to cross and hold above 17,666. And now holding below 17,250 may take it to 17,000 to 16,650 kind of levels in the Bank Nifty index.
All right, guys, just hold that thought. Let me quickly just mention what's happening as far as the pre-open is concerned. We're just counting down to that as well. Keep an eye on the currency. 65.26 is where we shut shop on Friday. That's going to be in focus today as well. In terms of stocks, L&T, Sun Pharma, some of the large caps that we'll be watching out for in terms of the way trades shaping up. And the opening tick, the pre-open moves that we're seeing are a little bit soft, as we've been seeing across the Asia screen. And the SGX Nifty also has been indicating since morning the markets could start off a little bit on the softer side. The pre-open quotes for both the benchmark indices start off on a little bit of a muted note is what we're tracking right now. The currency also opens a little bit weaker at 65.38 is what we're seeing as far as the currency is concerned. So that, there you go. The index seeing a little bit of green now. Let's see as to how that stabilizes. Pull up Sensex for you as well, and what we're tracking as far as the benchmark indices are concerned, and the way the currency is panning out as well is what we're tracking so far in terms of the way the rupees open at 65.36 is what we're seeing in regard to the way the currency opens panning out. Dhaval Shah, risk management consultant, joining in as well. Dhaval, morning. What do you make of the currency?
Yeah, good morning to all viewers. I believe currency as of now still trading in a tight price band after hitting 66.80 kind of levels, and as of now it is moving in a tight price band of 64.70 and 65.40. But overall, I believe volatility going to be increased from the current level onwards, as Fed in its last meeting already hinted that they might increase the interest rate. And the major thing which I have noted that they have removed the sentence financial situations and global situations. They have only concentrated on their labor market data and inflation data. So that will, I think, I don't know whether they are in a hurry or they are in real sense that they are looking to increase the interest rate. That will definitely, before that meetings, dollar will remain bull. And on a global side also, like Eurozone conditions or maybe China conditions on a deteriorating side. So I believe definitely pressure will remain on the local currency. And I believe downside 64.70 or maybe 65 level will remain there, and upside we could see 65.80 to 66 level very soon.
All right, Dhaval, thanks for that quick check on the currency right now. Still just tracking the pre-open for you, and looking a little quiet today as was expected, but lots of specific stocks that we're continuing to track that are in news. In fact, Ruchit, let me also get a call from you on Reliance Communications, because we're tracking, of course, details of that deal with Sistema later today. I just want to get a check on RCom and how it's been looking to you of late.
Yeah, if you just observe this weekly charts of RCom, then still in spite of last month's up move, we have been seeing this low top low bottom formation is still in place. So we don't think that the stock is in a hurry to give any sort of breakout and move further higher from current levels. It has tested its resistance zone of 84, 85, and from where it is again started showing some correction. So probably 85 would be the level to watch, wherein major resistance is coming. Only if this stock crosses this 83, 85 resistance zone, then we may see some good buying coming in.
All right, so that's as far as RCom is concerned, we'll be watching out for. But Chandan, some of the other stocks that have been in focus as well. I just want to get the pre-open codes going for L&T, Sun Pharma. These are some of the newsmakers that we'll be watching out for. And beyond that, the auto pack as well, on the back of the way the monthly sales numbers have been panning out, is what we've been working with. All right, Tata Motors up nearly 0.2%. Pull up L&T once again for you and get a mention going on the up one. M&M's up by nearly 1.3, 1.4. L&T in the pre-open is still indicating a little bit of a soft move there on the counter. We were discussing the banking, the Bank Nifty outlook, Chandan. Individually, Axis Bank, ICICI Bank, all of these counters have been in focus. Any strategy on some of the large cap banking names?
If you look at the derivatives data of last couple of days, we have seen built up of short position in most of the heavyweights counter, and that was the reason that Bank Nifty fell down sharply in the last week. If you look at the Axis Bank, the stock has fell to close 530 kind of zone and corrected sharply towards 670 kind of levels. Shorts are intact in the counter. Now it manages to hold above 500 zone, then only we may see a sign of short cover active in the counter. Talking about the ICICI Bank, the stock has been consolidating in a range but failed to surpass its crucial hurdle of 295 kind of levels. Recently it has taken support near to 270 zone. So those who are looking for intraday point of view can look at support near to 270 for the potential move towards 285 levels. But if you look at the price behavior in the database, we are quite positive on SDFC Bank. The stock is trading near to its lifetime high, holding the gains. The trend is intact. Rollers are on the highs, on the long side. So till it remains above 1070 levels, the stock is potential to revisit its lifetime high towards 1130 and even more higher levels. So we have positive sense on SDFC Bank. ICICI Bank can be taken as a short-term point of view, trading point of view. Axis Bank will avoid and watch the levels to pick the counter. So overall, we have seen built up of short position in most of the counters. So if recoveries come, we have to watch whether the momentum happens or the momentum fizzled out in the market.
Okay. Ruchit, I want to get your view on some of these pharma names. Glaxo, for instance, numbers, profit down about 25%. Glenmark, on the other hand, reported a good set of numbers. We've got also NPPA caps coming in, so we'll be watching out for an Alembic or a Unichem today. What's catching your eye from the mid-cap pharma pack, if anything, at this point?
Well, from mid-cap pharma, we are bullish on Divi's Lab. In fact, we have seen that the stock was consolidating since last 2-3 months, and just before the results were out last week, the stock has given a breakout from a symmetrical triangle pattern. So we believe that the stock is about to move higher, and maybe the recent highs or its lifetime highs could be tested again in this stock. So we are not focusing much on other mid-cap pharma stocks, but definitely Divi's Lab is one of the stock which is on our radar, and we are suggesting it to buy with stop loss below 1092 and target of the recent highs around 1225 which was seen.
Alright, so that's as far as some of these mid-caps are concerned that have been in focus in terms of where trade's panning out. But talk about a couple of the other newsmakers as well. You're going to be watching out for quite a few, some of the earnings impact coming in throughout the day. You'll also be tracking some of the earnings releases out there as well that we'll be watching out for. But, Chandan, one space which again has been somewhat active has been the mining and the metal pack. You've seen some bit of short covering probably in the October series, the way some of these counters played out. What are you advising clients to do with a couple of the frontline names like Hindalco, Tata Steel, or even for that matter, if you look at some of the non-index majors from this sector?
Yeah, first we look at the metal counter. Tata Steel has seen a strong recovery in the last month. It closed the series with a gain of more than 10%, managed to hold its multiple support of 240 kind of levels. Now the stock has been consolidating in a range and holding its 50-day moving average. So the stock which used to be a high beta counter, and it used to be sell on rally stock when market corrects, now taking some pause and showing some sign of resilience. That indicates that some buying action or the support based interest is coming back in the counter. So I'll go for buy on decline of strategy in Tata Steel till it holds above 237 238 zone. I recommend to buy on decline for the upside target towards 265 to 267 levels. Talking about Hindalco, the same kind of price behavior and the database have seen in the counter. Although we have seen fresh call writing at 90 strike, and that is the reason that upside seems to be limited, but is the stock is holding the gains even after the market pressure. We are expecting it to continuously take support near to 78 to 79 levels. But other stock like Vedanta, we are now witnessing some built up of short position. The stock is all set to break its immediate support of 100 zone, and because of that some put unwinding may drag it to lower levels. So those who are looking for the shorting opportunity in Vedanta can trade with 100 put, which is trading near to 6 rupees. Keep the stop loss of 3 for the upside target of 12 rupees. So we have positive view on Tata Steel, where we may see some support based buying while recommending to sell on the Vedanta.
All right, gentlemen, thank you so much for joining us this morning. We've got pre-open quotes coming in as well, Priyank, and apart from general weakness on the exchange, a whole host of those mid-cap names that on the back of earnings. So Sun Pharma, of course, because of the warning, down about 1.5%. L&T continuing its downtake. But from the mid-cap pack, take a look at an IDFC, those